Good morning, everyone. I am Amanda Ongst, the Senior Auditor and Office Manager at CUACG. This morning, Marcus King, our Vice President, is going to be doing our presentation over what auditors look for. A little bit about Marcus. He graduated from Freed-Hardeman University in 2013 with a bachelor's degree in accounting. He started auditing credit unions in June of 2013 and working for CUACG in January of 2014. He was promoted to audit manager in September of 2017, then director of product development and training. He received his master's of business administration in May of 2019, and then was promoted to vice president of CUACG in January of 2020. He became a CPA in August of 2020 and became a dad in August of 2022.
Thanks, Amanda. Yeah. As you can see, just by my background, credit unions is pretty much the only job I have ever known. There's kind of graduated in May of one year, then started working auditing credit unions in June of the next, and kind of worked my way up through the organization. So I like to think credit unions is my niche. It's a very special place. I've heard over the years, once you kind of get into credit union land, you kind of, don't get out of credit union land. So it's a special place. And I know if everyone's joining this webinar, it's a special place in your heart as well. So I appreciate everybody taking, 30 or 45 minutes out of your day to join me today. Hopefully you find, some good little tips, kind of what we look for, and kind of just key points that, I want to focus on. Kind of go over what auditors don't do and what auditors do, what we do and what we don't do. Kind of a tongue twister there. Just the kind of who we work for. Even though the manager and the credit union compliance officer might reach out to auditors, pretty much in the end we do work for the supervisory committee. Kind of talk about catching fraud and whatnot, where that comes from, and kind of key things to prevent it. And just at the end, kind of go over some key parts to remember. Payroll, nobody wants to talk about payroll, very private information, but just one thing that I want everybody to keep in mind, and just go over a couple things with BSA, ACH, and SafeAct. Like I said, we're just going to hit the high points here. It's just some things that I have seen over time, and several of my auditors have seen over time, that we just want to bring to your attention. It's not it's not nothing that we're going to write you up for, anything like that. You can't get any write-ups from this presentation, but hopefully it will help us keep from having some findings or some recommendations in the future for your audits that you have. Even if you don't use CUACG, hopefully a lot of the things that we'll go over today will be beneficial to you. And at the end, you can find me on LinkedIn. You can text, call my cell. You can email me anytime that you want. But we'll go over all that details at the end. So this is not trying to be a sales pitch or anything like that. I'm just trying to give you some helpful information that hopefully you can take back to your credit union that you can use. So I'm just kind of the main points of what the auditors do. So we're here to complete your audit requirements. That can be done internally or externally. Some larger credit unions may be able to feel the need by having an internal audit, but a lot of smaller places out there, it's more beneficial for them to hire an external firm. So we're here to meet those needs. We as auditors are here to complete any audits that you may see fit. We're trying to gain the best understanding of your credit union. Each and every credit union is different. Some have different segs, some are community chartered, some have one seg base, and everything like that. So it's up to us to gain an understanding of your credit union, because the more we know about your credit union, the better audit that you will receive. I always tell my clients, the first year it might not be might not be the best audit, because we're learning your processes, we're learning the reports you use and everything like that. The second year get better, and then the third year will probably be the best audit you receive, because we are we know what to expect. We know how to communicate with every person at the, credit union, because like I said, every credit union is different, but also every, CEO, every CFO, every teller is different than, the next place that we go to. So it's up to us to gain the best understanding of your credit union. Evaluate your internal controls. We're always here to try to, offer recommendations to you. Whether it's in the lending process, whether it's in the cash count, operations process, or, anything that goes on with the credit union, we're always trying to make sure everything's under dual control, making sure, what policies and procedures you are, following them. The next one's a little long sentence, but basically we compare last year's numbers to this year's numbers to see if there's any unexpected variances. One of the, classic examples is in the loans. If we see a credit union, loans grow, 50 to 100% from one year to the next. It's happened before, especially with a lot of smaller institutions. If you're a larger institution, if your loans grow 10 or 20%, well, what happened? Did you offer a loan promotion? Did you cut rates? Did you start offering a rate matching program? Did you start indirect lending? It's up to us to look back at your prior years and compare it to your current year's numbers to see, what's going on in the credit union, and see if any of that stuff may raise a red flag to you. My favorite part of the job is making sure all your accounts are in balance. Everybody has their, favorite parts, but I always enjoy looking at your reconciliation, looking at the balance sheet, and seeing, how you do your reconciliations, and what clears the next month, what reports that you have. So, we're here to make sure all your accounts are in balance at the end, and that's, kind of your annual audit requirement. That's one of the big steps for your annual audit, is to make sure all your general ledger accounts are in balance. And then also part of that, any bank accounts that you have, any investments that you have, we'll send, confirmations to them, just to confirm that that's what you have. Then also, if you're a federal or state charter credit union except in Georgia, account verification every 2 years. If you're in the state of Georgia, you have to do the account verification every year for the state charter credit unions there. So, we're just confirming, making sure there's no fraud going on. That's one of the best ways for us to, catch fraud, is to send confirmation letters to make sure that, this is the balance that the credit union says. Is it what the other banks say that you have? Is it what the members say that you have? Some of the fun things, what your auditor doesn't do. We don't make management decisions for you. We can't report to the board on your behalf. We can't hire and terminate employees. I have credit unions ask me all the time, can I do this and can I do that? We can, tell you kind of what the regulation is and how that can apply to your credit union, but we can't make the final, decision on your behalf. We can tell you what other credit unions do. We can even, sometimes give you our opinion. Sometimes our opinions, shouldn't, kind of should be taken with a grain of salt, since, we are on the other side of the aisle. If you were on the other side of the table, we are looking at your books. We're not, making the decisions. We're not reconciling your books. We're not doing any of that thing. So our opinion will be a little different than, maybe another manager, another CFO down the street, because we're looking at it from the whole totally different side of things. So we, I appreciate everybody, that ask our opinion on things, but, some things in auditor's opinion is not the best because we're not in your shoes. We are not on that side of the table. So. Like I said, we can't reconcile your accounts. That's not something that we can do, especially if we do your audits. If we don't do your audits, then we can, kind of reconcile your accounts. If we are, doing your audit and reconciling your accounts, that is kind of a conflict of interest, because, we can't audit something that we do ourselves. So, if we do, any type of your annual audits or anything like that, you pretty much will have to find a different person to do any reconciling items or make journal entries on your behalf. because we can't audit your books and do your books as well. So I hope that made sense. And we can't close your books as well. So we pretty much can't make any entries on your behalf. We can, tell you what entries that, we think should be made. If we see a count out and out of balance, we can most definitely bring that to your attention. We can tell you that what the balance should be, but we can in the end reconcile the accounts. We can't make that, entry on your books. So I see that we do have one question from Kyle. Do you speak directly to the supervisory committee? Absolutely. I hope this slide kind of goes over that a little bit. We work directly for the supervisory committee. We don't work for management. We don't work for the CFO. We don't do any of that. We work directly for the supervisory committee. And at the end of all our annual audits, we will try to meet with the supervisory committee to kind of tell them the findings and everything like that. We don't try to hide anything from the supervisory committee, because in the end, it's the supervisory committee's job to be in charge of the audits. Just kind of a couple things here, kind of going along with the supervisory committee. If you're under 500 million in assets, you don't have to have an opinion audit. You can have a agreed upon procedure audit per NCUA regulations. Then of course, if you're over 500 million in assets, then you have to have an audit required by GAAP and GAS, and which is commonly referred to as the opinion audit. So I've worked on several opinion audits, and I've also worked on several agreed upon procedures audits. And to tell you the truth, the agreed upon procedure supervisory committee audit often looks at more items than the opinion audit does. So, a couple of different things that different between an opinion and a supervisory committee audit. In an agreed upon procedure, it's pretty straightforward. The contract is what we do. There's no liability for the auditing firm. With an opinion audit, there is liability for the auditor. So many credit unions, like that, since, the opinion audit has to have liability insurance and all that other fun stuff. And of course, supervisory committee auditing firms do as well. But, there's a lot more risk and there's a lot more ownership upon the CPA firm that does opinion audits than that primarily do agreed upon procedure audits. So I hope I didn't confuse anybody. Us auditors, we can kind of ramble on for a minute or two. So I know that is something that, I wanted everybody to know. And kind of the final point down here, this is just, my rule of thumb as vice president of CUACG. If there's any audits that are required by NCUA regulations or any other regulations like that, the supervisory committee needs to sign the contract and needs to be aware of it. The report needs to be directed and given to the supervisory committee. Since it's the supervisory committee's job to make sure all the audits are completed, then I believe that all the contracts that are required need to be done by the supervisory committee, need to be signed, need to be agreed upon. That's not saying that that management can't, say, your prices are too high. This is more than we have budgeted and stuff like that. But at the end of the day, it is the supervisory committee who is in charge of the audits, and that is primarily who the auditors work for. Next slide. One of the biggest things that, one of the biggest notions that we see is, a lot of credit unions think that we're here to catch fraud. We are not here to catch fraud. We are here to do, we are here to make sure that, all your accounts are in balance, that, your procedures are being followed. But, who primarily discovers fraud is actually internally insiders, other employees at the credit union actually, find the fraud. Then, they call the auditors for a fraud audit and everything like that. But, auditors normally don't catch the fraud. It's usually found internally, then, kind of called on up the ladders and stuff like that. One reason for this, us auditors always live kind of 3 or 6 months in the past. So we never kind of audit in the present day. So, March 31st is coming up. So, that's a quarter in. That's when a lot of audits are completed. Well, we might not get to the March 31st numbers until May or June or July of this year, because we're always, 3 to 6 months behind. So we're just now completing some, December 31st audits. So, you might think, the auditor is behind and everything like that, but that's just how the auditing world works. We always work, 3 months in the past and 6 months in the past. So we're never in the current day. We're always, looking at the past and everything like that. So, and always kind of the most common fraud in credit unions is employees or tellers stealing from the teller drawers and, taking the money for themselves. There's been several fraud audits that we have completed where, a teller's done that. Then we kind of look, at the other activities that the teller has done. Then we find, the teller might have changed a couple of due dates, might have changed the address for a member and been stealing from that member as well. So, taking from a teller drawer is kind of one of the most, common areas that we see. One of the biggest fraud audits that I did was actually $250,000 that a manager had stole from the credit union over several years. That, and the credit union had to file a bond claim and all that fun stuff. But how that happened was, it was actually for an ATM. The member was going to the manager was refilling the ATM and was taking money off the top of the ATM. So that's another good point. Got to make sure, everything is dual control, especially for the cash part here. So, ways to minimize cash loss, sound internal controls, make sure everything is under dual control, frequent cash counts. It's always good to have an external cash count, but it's always good to have an internal cash count as well. Like a branch manager, somebody that doesn't have access to cash to go in and, count their cash, count the teller's cash and everything like that. But one of the main points, make sure it's surprise, make sure that whoever's counting cash, make sure the credit union doesn't know that you're going to count cash that day. Make sure the tellers don't suspect you of coming in and, counting the cash, because if they know, there's going to be a cash count, then they're going to make everything happen. They're going to, make the entries or give the money back or anything like that. So if they're completely caught off guard, then that's the way that you're going to, catch most cash losses due to stealing and fraud and everything else like that. So, but the main important things, make sure it's, on a surprise, make sure it's frequent, and make sure a lot of things are under dual control. Yeah, go ahead. We can go to the next part here under payroll. A lot of y'all are going to hate me for this, but it's my job to bring this to your attention. So, a lot of y'all will look at this and say gift cards are taxable income to employees. And that is very true. I know a lot of credit unions give, employees gift cards around Christmas time and everything like that. At the end of the day, those gift cards are actually taxable income to the employees. That's something that, not something that I'll write in a report or anything like that, but it will be something that I tell the credit unions, hey, if you're going to give gift cards, that is actually taxable income. And why it's taxable income, anything that is cash equivalent, gift cards, cash, or anything like that, that is taxable income. So here are a couple other ideas that, we can recognize employees, that we can, show employees that we value them, that wouldn't be considered taxable income. So, low value items, for employee has a birthday coming up, if you want to get them something, small, it doesn't have to be a gift card. It can be something tangible. I mean, if we send flowers or a fruit tray, if a employee has somebody that passes away in their family and we want to provide them flowers or fruit or cater them a meal or anything like that, that is absolutely acceptable. And that's something that an employee doesn't have to pay taxes on. But, it's always good to have something, something good to recognize employees. That doesn't have to be a gift card. Meals, of course, I believe every credit union that's on the call has meals catered to them, whether they have a, monthly birthday party where everybody caters a meal from, a local restaurant or anything like that. So, you don't have to worry about that being, occasion, that you don't have to worry about that being, taxable income. Occasional parties, picnics, and their guests or anything like that. If you rent out like a baseball game for a night or anything like that, that's, rent out a suite or anything like that. That's not taxable income. That's just, employee recognition, and everything like that. Group life insurance payable on the death of employee, spouse, or dependent on the face amount that isn't more than 2,000. So if it is more than 2,000, then that's taxable, but anything under 2,000 is not taxable. But the main thing that I want everybody to remember for this, if something is tangible, it might not be, taxable income. If it's a cash equivalent, if it's a gift card, you might as well just, increase the employee's pay for that amount and have taxes taken out and everything like that. So. Yes, Miss Linda, that includes Visa gift cards and it includes store-bought gift cards. So if you do a gift card to Outback, it is the same as doing a Visa gift card to an employee as well. So anything that is a cash equivalent that the employee can use as cash or anything like that, use in the place of cash, that would be considered taxable income. So I know a lot of people won't like this slide, but it's my job as an auditor to bring this to your attention to make sure that you are aware of it. So I'm not, I don't think the IRS is going to come around and audit every single credit union, to make sure they're not giving gift cards, but it's something that is my job to bring to your attention. BSA. Everybody loves BSA. I just tried to capture one of these slides here of a CTR form. As you will see out here on the right in the picture, there are some that have asterisks by it, little stars beside it, and there are some that do not have stars beside it. At the end of the day, everything, if the credit union has the information, everything should be filled out. This is especially true for the occupation in the NAICS code. We see a lot of these forms or a lot of this field not filled out, and credit unions will tell us, well, it doesn't have a star beside it, so I don't have to fill it out. Well, that's not entirely the case. Amanda, if you will go to the next slide. This is something directly from FinCEN. I didn't want to kind of copy and paste it into my own words. So I wanted to kind of give you the snippet of directly what came from FinCEN. As you can see, this is from June of 2020, right at the start of the pandemic. Talks about misconceptions about CTRs and SARs about optional data. So if you'll bear with me, I just want to read this to you to make sure none questions go unanswered or anything like that. So FinCEN sometimes cites financial institutions for omitting data from currency transaction reports or suspicious. So CTRs and SARs. Some filers in their software provide assert that missing data is optional and therefore does not need to be provided. It is a common misconception that data only needs to be reported in critical CTR SARs fields. So those marked with the asterisk. So, this is saying that, anything that is marked with an asterisk is required, but any other information is also required. So let me continue reading. Thus, filers providers incorrectly presume that fields without an asterisk must be optional. The first instructions on the CTR and SARs form, along with other FinCEN forms, reads, complete the report in its entirety with all requested or required data known to the filers. FinCEN filing exceptions for non-critical fields are also addressed in the first question of the CTR and SAR frequently asked questions, which state, for both critical and non-critical elements, financial institutions must complete those items for which they have relevant information, regardless of whether or not the individual items are deemed critical for the technical filing purposes. So you'll have to forgive me in my reading because, I'm an accountant, I'm not an English major, so please forgive me if I mispronounce a word or stumble over my words. So this is more than what I normally talk in a given day, so please forgive me for that. The last paragraph here, therefore, basic CTR and SAR filing requirements is that all data known by the financial institution and applicable to a data field must be reported. Filers do not have the option of omitting known data. So if you know the member's occupation, you can easily go out there for a search for NAICS code and fill that out as well. So if you know the information, it must be submitted on the forms, the CTR and the SAR forms. I know that's a little more work, for each credit union trying to look up the occupation, trying to look up the NAICS code, but that is the requirements directly from FinCEN. And of course, the U.S. Treasury Department is over, FinCEN. So I know that might not be something that you want to hear, but as you can see directly from FinCEN, if you can obtain the data, then the data should be completed, whether or not it has a star beside it or an asterisk beside it or anything like that. So I know that's not something that a lot of people want to hear, but it is something required by the FinCEN. Okay. Two different things here. A lot of the things that we run across. A lot of people think OFAC and FinCEN are the same thing. They are not. OFAC is entirely different from FinCEN. An OFAC regulation is that your entire membership base must be checked against the OFAC listing on a regular basis. What a regular basis can mean is up for interpretation. If you're a very small credit union, then you can get away with quarterly. But if you're a billion-dollar institution, you might want to do nightly or weekly at least. The more internal controls that are in place, the more often this is checked is, better for the financial institution. So OFAC, your membership base must be checked on a regular basis. And also, OFAC, we got to check new accounts, wires, IRT transactions, beneficiaries at account opening and account closing. A lot of people don't like that either, that beneficiaries must be checked at account opening. But there is a question from FinCEN out there on their Q&A section of the website that states, credit unions or other financial institutions are recommended to check beneficiaries at account opening. So if you're one of our lucky clients to do a BSA audit or review new accounts or anything like that, you likely have heard from us that you need to check beneficiaries at account opening as well. Kind of going back to the NAICS code, I see that we have a question here. What codes needs to be used if they are unemployed or if their income due to Social Security disability? What we normally see is their last occupation. So if they're a retired school teacher, then of course you could put required school teacher and just put the NAICS code for the school teacher and stuff like that. If they're unemployed or anything like that, I don't know if they have a direct code for that, but I'd be happy to look that up. But if you can always go back to kind of their previous occupation if you know that information. So I hope that answers your question there. And kind of the FinCEN 314A, most of these are sent every 2 weeks from FinCEN. If there, is something that happens major, like a terrorist attack or anything like that, I've seen that, there might be one, in between the 2 weeks that you normally receive the FinCEN 314A. And of course, you've got 14 days from whenever the report is sent to download it and to compare your membership base. Luckily, there's a lot of, data processors that can help you with this and can also help you with the OFAC checks. A lot of credit unions will tell me when they compare their membership base that it is, done through their data processor. So, that's something that you can easily pay for through your data processor. And we have another question here from an anonymous person. I was reading the OFAC rules last night. It states that we should check deposits and cash checks or cash checks as well. Do we check the payors of the checks before depositing? We currently check non-members cashing checks from the members. That has been my understanding, your last sentence there about non-members cashing checks. I've always recommended if you don't have a non-member log that you obtain a non-member log and check all not all non-members against the OFAC listing. I think that's the best practice, even if it is, if you want to set a dollar amount to say anything over $1,000, we'll check. That's kind of up to the credit union to see how much risk they are willing to take. If you want to be, if you don't want to take much risk, it's good to check a lot of, non-members. Every check that comes in that's, non-member comes in and cashes, you might want to, check them all. But if you're all right with, taking a little bit more risk, you might want to set like a $500 or $1,000 limit where anything over that, we're going to check that against the OFAC listing. So, that's one of the common things that, recommendations that we make that, if a non-member comes in to cash a member check, it's always a good idea to run that non-member against the OFAC listing just to make sure we're not giving any funds to terrorists or anything like that. I know, a lot of our members are, low risk members and not high for, suspicious activity or anything like that. but it's always good to, better be safe than sorry, if you will. And going on to ACH. This is kind of one of the big findings that we've had in the past couple of years. Contact registration with the National Association. I get tongue-tied a lot, so please forgive me for that. So there's two types. You have to register an employee for ACH operations and risk management. Just kind of below is kind of the different areas that must be given, name, email address, phone number, and stuff like that. One thing to remember, if that employee does leave employment or another employee kind of takes their position, the credit union has 45 days to update the NACHA registration and stuff like that. So if you're not aware that your credit union has registered with the National Association, there is a website that you can go in and kind of type your routing number in, and you can see if a contact registration has been updated. Sorry, you'll have to forgive me for mumbling over my words. And all registration must be verified by the credit union at least annually. So if nothing changes, you still have to go in annually to update the registration just to verify that all the data is correct and everything like that. So it's just something that the National Association, if something were to happen with ACH operations or risk management or fraud or anything like that, then the National Association can know who to contact with the credit union. So this is one of the rules that has been, and it's fairly recent, I believe 2019 or 2020 or something like that. So it's one of the fair new regulations that are out there. So, just make sure that you go to the website, and at the end, I'll give you my email address, and anybody that wants to email me for the website, I'll be happy to send that to them. You pretty much enter your routing number that each individual credit union has, and you can see if you are registered, if you have not been registered. So that's one of the key findings that we're finding with ACH over the past couple of years. Next slide, stop payments and written statement of unauthorized debits, WASDs, if you will. That's a mouthful as well. Stop payments, they need to happen before the amount clears the member's accounts, and the written statement should happen after it clears the member's account. So if a member is disputing a payment, if they're disputing anything like that, or if they want to stop something, a stop payment must happen before it clears the member's account. Then if it's actually hit the member's account, the member must fill out a written statement of unauthorized debits. Kind of some things that we see a credit union kind of confuses the two. I've actually seen several credit unions fill both of these out at the same time. And I guess if you want to stop all payments going forward, you can, fill out a stop payment, but, stop payments must be done before, written statements must be done after. And just, kind of a couple things with stop payments. If it's verbal, if the member gives it to the credit union over the phone, it's 14 days. If the credit union receives it in writing, it's 6 months. Then it must stay on unless it's renewed. So kind of good things to remember. A verbal stop payment is good for 14 days. A written stop payment can be good up to 6 months. Unless it's renewed, then it can kind of keep on rolling over and over again. So and then the written statement must be signed and dated on or after the settlement date of the entry. So you can't do a written statement before it hits the member's account. So that's just something I wanted to bring to your attention. Make sure that everybody is aware of the difference between a stop payment and the written statement of unauthorized debits. Okay. So it looks like it's 34 after. So I thought this was going to last 30 minutes and I'd give you your time back. So I apologize if I'm a little long-winded, but I believe the SAFE Act, and we might have one more, a couple more slides after this. So I promise not to keep you too long. One of the main findings that we have with the SAFE Act is, especially with closed-end mortgages, that the MLOs and credit unions NMLS numbers must go on the following following statements: the application, the closing estimate, the closing disclosure, and the note, and the deed of trust or mortgage. Some states have different names for that, but the credit unions and the mortgage loan originators MLS number must go on all 5 of the following items for closed-end mortgages. So for purchases for refinances or anything like that. If it's closed in, then the MLS number must go on the following data. If it's a HELOC, if it's open end, then that regulation don't apply. But for all closed in mortgages, the MLS number must go on the following data that is listed down below. Sorry. Sometimes I twitch, step over my letters with the MLS and MLOs and everything like that. So if you've ever been in credit union land, you understand that there's a lot of acronyms that go with a lot of different things. So just the numbers that every MLO has and every number unique to the credit union must go on all the following data. And I'm probably not telling you anything that you don't know already, but you will be surprised of how many exceptions that we have for the following items right there. And also something that might not be recognized, but if we have a mortgage loan originator that leaves the credit union has 30 days to update the registry to reflect that change. And I've actually had several of these where I've talked with the credit unions about if an employee leaves that actually has a number that is registered to the credit union, then we have to go into the registry and update that they're no longer employed. If it's just one of the regulations that we have to follow that a lot of people might not be aware of, but it's something that I wanted to bring to your attention as well. So. Another one of the big things, the loan estimate, once the completed application is given, you have 3 days from the date of the completed application to give the loan estimate to the member. And of course, the loan estimate just talks about all the fees that is going to be associated, their estimated monthly payments and everything like that. If something changes with the loan amount or anything like that, of course, we can go back and reissue the loan estimate. But the main part that I want everybody to know, once the credit union receives a completed application, you got 3 days to give the loan estimate to the member. Another thing that is surprising, but I wanted to bring to everybody's attention that the registered MLO must provide their unique identifier number to each consumer. So each MLO, of course, has their own unique identifier, the MLS number, and that must be given to the members upon first request before acting as a mortgage loan originator, and through their originator's initial first writing with the credit union. So kind of ways to accomplish this, if you're an MLO, want to make sure that that your number is on your business cards, especially on the signature line of your email address. And another good idea is to actually have all the numbers on your website or in the credit union's lobby, because as we move towards a more digital age, it's always good to most of the first points of contact with a new member that we're going to have is actually through the website, because members are actually going to go to your website to look at your loan rates or your mortgage rates or anything like that. So it's always good to have, the credit unions and each MLO, their number on your website or in the lobby, because like I said, we're moving to a more digital age. If somebody's going to, look for a mortgage, a lot of people are going to rate shop, so they're going to go to your, website to check out your rates, and it's always good to have the numbers out there, because it says upon request or at the first point of contact. So the website is the first point of contact for a lot of members and credit unions out there. So just a helpful tip. And that's all I got for you. I know I've probably said a lot of information in a very small amount of time. So if I need to clarify anything, Amanda, if you'll go to the next slide. Here is my email address. Here is my cell phone number. If you want to look me up on LinkedIn, you can absolutely look me up on LinkedIn. But I am happy to address any questions that you have. Even if you're not our client, you can absolutely call me. You can absolutely text me, email me, look me up on LinkedIn or anything like that, and I'll be happy to answer any questions that you have. I'm not going to, charge you a fee. I'm not going to charge you per hour. But I'm love to help any credit unions that I can with any problems that they might have. So if nobody has any questions in the chat, I can kind of, give you a minute or two But if you don't have any questions, I appreciate your time today. I appreciate everybody's attention, taking 40 minutes out of your day to hopefully help you out a little bit about, what us auditors look for and how we can, maybe prevent some findings in the future at your credit union. Appreciate that, Kyle. I listened to your webinar a couple of weeks ago as well, and really great beneficial information too. So like I said, here is all my contact information. If you have any questions, absolutely reach out to me. I'll be happy to help you in any way that I can. So Amanda, if you want to, kind of end the webinar for everybody, I appreciate everybody's attention and I appreciate you joining me, and, hope you will join CUACG on a future webinar that we might have.
Thank you.
Thanks, everybody.